Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, this video is being filmed on Tuesday night for Wednesday's trading. That is 08/26/09. Traders, in last night's video, we left you off with a swing day. The video right before last night's, we're like, come on, the bull party, let's go. And then the market throws a swing day at us. And on a swing day, we have to sell it if it's a sell swing day, no matter what the outcome, because the percentages of that swing day working out are really, really high. As it turned out, yesterday's swing day did not work. And to be honest, traders, it's very rarely that I have to get out in front of this camera and say a swing day didn't produce a winning trade. So that, in my mind, the fact that it did go up anyway, is a testament to the internal strength in our markets. So I know the street is just screaming for the massive correction, traders, but in that video just 2 nights ago, we had all that fun with the little bull behind me, but I kept saying the chart, the indices especially, start down here and work their way all the way up to here, and when a market looks like this, it's not bearish, it's bullish. With that in mind, traders, I'd like to say resistance is now becoming support on our daily charts, in the NASDAQ, in the Dow Jones Industrial Average, in the Dow Jones Transportation Average, and in the S&P, but especially the transportation and the industrials. What was resistance and we couldn't get above, we are now above it and it's become support. Very interesting. If that's the case, continue to buy dips or pullbacks, if you will. That's where the market's been going up, and then it has a day or two setback. You get in and buy that. Even during the day, if it's a bullish day and you have pullbacks, don't sell into them. Buy into those little dips during the day. That's what we are trying to do here at the Emini Trading Academy. Granted, we had to sidestep the bull yesterday and trade the swing day, but that's part of trading. Those are rules. We stick to our rules. Again, the swing day works so often, I can deal with a losing day and still not look at the swing day as something I wouldn't do again the next time I see it. You need to be the same way. Rules are rules. You stick to them every time, and then you will have a much smoother curve in your trading. All right, traders, I'm not going to bore you too much. This video is going to be quick. I'm going to show you 3 charts right now which should illustrate exactly this. Resistance is now becoming support. Let's go look at the charts. Okay, traders, the first chart you are looking at is the NASDAQ daily bar chart for September. And traders, again, this is definitely not, I repeat, not what a bear market looks like. Starting down here, left portion of the corner of your computer screen, and works its way all the way up to the right side high on your computer screen. If you see that, this would be considered bull, not bear. Even if it's a bull move with inside a bigger bear, still a bull move and you trade it as such. With that in mind, what we are paying respect to for tomorrow's trading is this new channel developing within this major parallel channel. NASDAQ has been riding this major parallel channel all the way up. Well, now it's in a brand new little channel here, and we're going to respect that channel and buy the dips within it unless it breaks out under it. And then, of course, we buy dips once it gets back down here. But for now, we are in the channel. We are expecting to buy the dips and complete the move up to the top of this parallel channel. That's what we're hoping to see. That is what we do see on the charts. So we're trading what we see, and luckily we get to trade what we're hoping for at the same time. But you know us, we only trade what we see, not what we hope for. Just happens to be a double package combo here for us. We'd like to see it go higher. It looks like it wants to go higher. It's inside of a parallel channel with inside of a larger parallel channel. That is still bullish. That tells me to continue to buy dips. Now that's the NASDAQ. Now I'm going to show you 2 more charts which should illustrate that resistance. Resistance is something that when you're in a market and it's trying to go up and it hits a spot and then it falls back down, this spot is considered resistance. Once you get above the resistance, it becomes support. And I'm going to show that to you right now. Let's take a look, traders. Okay, traders, what we are looking at now is the Dow Jones Transportation Average. And we are noticing that previous resistance is becoming support. And what does that mean? Well, here You created a resistance level. The market attempted to get near it and broke down. Finally got up to this resistance level and did have a major breakdown, right? Now on the way back up, it hits the level, comes off slightly, gets above it, hits it again, and now we are here. And we settled here for 2 sessions in a row above the resistance line. That becomes significant, traders, because when resistance gets broken or violated on the upside, it then becomes support. Now, again, a little illustration here. If you have a market that hit resistance, broke it, and got above it, when you get back down to it, that becomes a support zone. And if it holds, it's definitely a signal that you're going to move higher off that support line, right? Well, that's the transportation average. Now I'm going to show you the Dow Jones Industrial Average, which should be quite impressive if thinking about this little formation right here. Okay, traders, once again, now this is the Dow Jones Industrial Average daily bar chart, and previous resistance is becoming support, which has already been tested once and held. Look at this. Resistance, right? Across this line, just like I showed you on the last chart. Maybe I can do that line a little better. There you go. All right. We ran down after making that resistance, hit it, and it failed, and we broke down and put a nice V-bottom in on top of it all, right? So then we come back up through that V-bottom. It gets above the resistance and tests it right here. And what does it do after it tests it? It goes right up to here. That is just like the illustration I showed you. That is just what I'm talking about. Once you have resistance and it gets violated, resistance, boom. Resistance, boom. Once violated, it becomes support and a buy zone for a higher move. That is what the industrial average is showing us right now, traders. So again, proof that you are a buyer of pullbacks. You see that level, you buy it again unless it breaks it and violates it on the downside. This is where our support now comes in. That support is much higher than what was the low, right? So thank goodness we're finding support levels up higher in the Dow Jones Industrial Average. Traders, pull your charts, take a look at this for yourself, notice where your resistance was and where it's been tested and where it's now support, and take a look at that. It'll give you a decent clue as to where these markets should go over the near term. I guess we call it near to long term because this isn't about day trading. This is about support and resistance at a much larger scale. All right, traders, make sure you pull your charts and do your own homework, and I'll see you at the site. So, traders, you see those charts? Again, let me make sure that you're clear about this, and this is basically technical analysis 101 here, traders. You have a market that's starting to go up, 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 and it hits a spot, comes back down, hits that spot again, comes back down. This is now considered resistance, right? Let's say the market then bulls up through the resistance. It becomes support if it tests it, which should be a buy indication for a much higher level. That is why I am saying resistance is now becoming support in our indices, and that is really constructive. So go indices, go, baby. I am not getting off this buy dips kick unless this market really breaks down and turns into another bear. For now, we are in a bull leg and we will trade it as such, and that means buy the dips, buy the pullbacks, even if they're 2 days long, sidestep them as they come down and buy them. If you are going to sell into those, you got to be careful because that's a tricky thing to do. Like with the swing day yesterday, we tried to sell into what we know is bullish, but we have rules to follow. And I'm really glad to see that the market was actually strong enough to take that swing day and throw it out the window. Now, it doesn't help the traders who got into it. However, it does reinforce that this market has good internal strength. Look at that for yourselves. All right, traders, I'm not going to do much more in this video. Remember this, as we did yesterday, a stop is your best friend. Do not trade without stops. A stop will save your account. It'll save your equity, and it'll certainly save your sanity to know that you're out of a market and glad to be out instead of praying that you somehow had gotten out but you never placed your stop. So place your stops, place them first. Don't trade alone. Traders, come on down to www.livewithoscar.com. Grab a free membership, jump into our chat rooms, join our classes when they're held, and be there so that you can read the information with the rest of us as it comes down, the news, the technicals. We put it all together and try to stay on the right side of the market. It's a lot easier to do instead of being alone with the whole crowd. There's strength in numbers and unity, right? So make sure you come on down to the site and spend some time with the rest of our traders. All right, traders, give me a call anytime, day or night, 702-629-4755. Do not fall in love with the downside. You get downside dips, you buy into them, and keep your emotions out of trading. Traders, it's the best thing I can tell you to do is try to not have emotions in your trades. And one of the best things you can do to help yourselves with that is to say this mantra to yourselves over and over every day, every night, especially when you're trading. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.